When we're looking for shorting opportunities, we're moving from a monthly chart sell program. It means we're looking for the market to move away from a premium array, and we're moving down into the lower time frame, which would be the weekly chart, and we're looking for it to become a sell program as well. So we're looking for the market to move away from its premium arrays down into a lower time frame, daily. We're watching for price to move away from its individual premium arrays down into a 4-hour chart, looking for its sell program as well, moving away from its premium arrays down into a 1-hour chart, where we're again looking for the market to move away from their premium arrays. So if we look at the slide here to the right, we have the monthly, the weekly, the daily, the 4-hour, and the 1-hour. And what we're focusing on the monthly chart is we're looking for a premium array to trade off of. In other words, that's going to be our point of origin. From the monthly, weekly, daily, and 4-hour, these time frames, you're scanning, searching, and trying to determine all of the PD arrays, not just premium and not just discount. You're looking for all of them from each time frame, because all of them will give us potentially new setups, short-term trading or one-shot kill setups. And also, if we're looking for a move, in this case, a selling opportunity, and we're framing it off of a monthly PD array from a premium level, that means we're in basically an overbought condition. And we're going to be watching and expecting the price to move lower to trade down to a weekly discount. So if we're going to look at the monthly, the weekly, the daily, and 4-hour on both premium and discount basis, when we do this, if we're bearish, if we're looking for the monthly premium arrays to influence price to go lower, why is it important to look at the monthly, weekly, daily, and 4-hour discount arrays? Because we're looking for these arrays in the discount form to break. We want to see them break, and we want to see them continuously keep breaking until we get down to our weekly discount array. So if we're framing a monthly premium PD array, we're expecting lower prices from a monthly level, and we're trying to get down into a weekly discount. Now, it could be any one of the discount arrays, whichever one appears on the chart or the market that you're trading. Not every pair or market has every single discount array. There's only a few that can exist. Very rarely have you ever seen more than 3. So if you focus on what you're looking for in terms of monthly down into a daily, it gives you a very clear-cut thing to look for. There's not a plethora of things to choose from, or, well, there's so many things it could be, Michael, which level is it? No, it's very obvious. We're framing the market contextually and conceptually. So it gives us a way to break down the marketplace and define where that market may most and obviously likely reach to. So we're scouting for opposing PD arrays from the monthly down into a weekly discount. So again, monthly premium level, and we're trying to look for an opposing weekly PD array in the form of a discount. From that monthly premium array, we drop down into a weekly, daily, and 4-hour at every premium array for each one of those time frames. And we're scanning for all of the premium arrays where we can take short-term trades from as a short. Every one of those at the weekly, daily, and 4-hour, if we find a level like that, we refine it all the way to the 1-hour chart. Our 1-hour chart is our executable time frame for one shot, one kills, or short-term trading. Once you have that executed, what we're doing is we're aiming for that weekly discount PD array. There's your cycle. We want a monthly premium array, and we start there. We're looking for a opposing weekly discount. Whatever that range is, it may be hundreds of pips, or it could be 1,000 pips. I don't know. It's going to be unique to each market and environment. But we may have missed the real opportunity to trade off of that monthly premium. Maybe you just sat down on your chart and said, oh, look at this. It's coming off of a monthly bearish order block. So it's already moved away from it. You can't really use that to trade off of. You just know that it's moving lower. So what do you do next? You drop down to a weekly. What's the weekly premium arrays? There may be one it trades up to later on, or a daily chart. It may trade up into a daily premium array, or a 4-hour. One of those 4 time frames is going to give you a setup based on the fact that the monthly premium is overbought. We most likely are going to trade lower, and we're going to be looking for a lesser time frame discount array. What's less than a monthly? A weekly. We execute regardless if it's on a weekly, daily, or 4-hour premium level from a 1-hour chart. We get down to the discount on a weekly. That's our objective. Throughout the time from that execution, if it's a weekly or it's a monthly level, we could potentially see multiple short-term trades form. If it's from a 4-hour basis, you won't see that many chart setups form, but nonetheless, there's still going to be high probability. Okay, for buying opportunities, We're going to be looking for a monthly chart buy program. So we're going to be looking at a monthly discount array, and we're going to be looking for it to go into a buy program, in other words, we're expecting higher prices. Weekly chart, we drop down into it and we start looking for all of the discount PD arrays as well. And we look for the daily chart to also move away from its discount arrays and then dropping them to a lower 4-hour and then ultimately down to a 1-hour chart, looking at all of the discount PD arrays to offer support and price. But ultimately, we're framing it off of whatever the monthly chart discount array is. That's the beginning basis point. So we're starting from a monthly level, we're finding a discount. If we're oversold or if we're in a really deep discount market, in other words, it's traded for a long time lower, and we found some old institutional price models for bullish institutional order flow, for instance, a bullish order block, an old high or an old low, whatever's caused the market to trade higher in the past, all of those are potential scenarios. We're looking for a lower time frame opposing PD array. In this case, we're looking for a weekly premium array. We're scouting opposing PD arrays, but we're starting from that monthly basis for a discount. So the lesser time frame from a monthly is a weekly, and the opposing from a discount is premium. So we're looking for an oversold condition on a monthly to a higher time frame premium array that would be seen on a weekly chart. So that would give us a relatively intermediate term overbought scenario. It helps us frame the model without using any indicators. Once we arrive at discount monthly PD arrays, we go down through the monthly, the weekly, the daily, and the 4-hour to reference all of its individual unique discount arrays. Every single one of these, even if we missed the monthly discount array and prices already moved away from it, we can't use it, but we can refer to it as an indication that markets wanting to go higher. So therefore, we're identifying that weekly premium level as a target. So whatever that range is, that's what we're waiting for it to trade up to. Between them 2 points, there may be thousands or hundreds of pips in terms of the difference between the monthly discount level and the weekly premium. We time all of those potential setups with the 1-hour chart, aiming for that weekly premium array. And again, it could be multiple short-term trades forming between the monthly, the weekly, and daily, getting to that weekly premium array. Again, if we drop down to a 4-hour chart, once we get into the 4-hour, the trades start to fall off a lot in terms of the frequency or multitude. Okay, if we look at how we can use the same model dropping down from a weekly chart, we can start from a weekly premium looking into a lower time frame daily discount. And we're going to be scouting opposing PD arrays respectively. And from a weekly to daily to a 4-hour, we're looking for all the premium arrays that we could short from, and we key off of whatever they are. We wait for price to trade to them, and then we use the 1-hour chart to sell short from. That's our executable time frame, aiming for that lower level time frame daily discount. This, my friends, is the one-shot, one-kill setup. This is my bread and butter. This is the one that has consistent setups every single week. There's something to trade off of, but you have to go through the process of waiting for it to give it to you. The opposite is seen here when we're looking for a weekly discount, scouting an opposing PD array for a daily premium level. We drop down from the weekly, the daily, and the 4-hour, looking for all of the discount PD arrays, executing on any one of them from a 1-hour chart. And again, this is the one-shot, one-kill setup for longs. Okay, we talked about the swing trade progression, and it's important to bring this back up again because without this understanding, it's going to be a little too vague. But I gave you a model at which we thought that maybe this is a 6-month outlook on price. Okay, maybe it's a little aggressive to say 6 months, but just for the sake of argument and discussion, let's just say this whole entire range of higher highs and higher lows is 6 months. And we had the benefit of forecasting the potential move to see this unfold. Each one of these price legs has an impulse leg, and it has a retracement, then it has an expansion swing. Inside of each individual impulse swing, there could be smaller impulse and expansion swings. Each expansion swing, again, just like we saw in the impulse swing, could be broken down to a smaller time frame, seeing its own individual unique impulse swing and expansion swing. And this is repeated throughout the entire fractal that is seen in price. If this is a whole landscape, if you will, of 6 months of price data, this could be every low that it trades from and trades higher, every single time it makes a low and moves up graphically, that is a potential short-term trade. So just from this chart alone, if you take a moment and count every time it creates a move up, use that lowest point at which you could frame a short-term trade, count them. I'll give you a moment to do so. There's potentially, just on longs, there's 8 short-term setups here just by breaking the fractal down one scale. But we can go further than that and break down the smaller swings into their individual impulse swing, retracement, and expansion swing. And its smaller expansion swing can be further broken down. Each individual fractal can be broken down to a less fractal. Now, if we count how many opportunities you could be a buyer when you're bullish and you can frame the marketplace correctly, how many opportunities do you see here in terms of potential buys? There's potentially 16 buying opportunities in this overall fractal. That's not counting any short-term trades that you could have done on all the retracements. Every little red section in here, they could also be short-term trades as well. If we couple those with the buying opportunities, there's a great deal more trades that are available as a short-term trader.